Of course, buying a house is one of the most stressful things you can do, whether you're a first-time buyer trying to get onto that first rung of the ladder, or someone who's refinancing in a volatile market. Well, now one of Britain's newest banks has got a solution it thinks will shake up the industry. The key component is bringing together pension funds and the mortgage market. Well, I spoke to Arjan and Hamish from Perenna Bank, who told me all about it. Arjan, let's start with you. Give me the overview of Perenna Bank. What do you guys do?
So Perenna Bank is a new type of UK bank. We're the first bank in the UK that is offering long-dated fixed-rate mortgages, and we don't fund these mortgages with deposits. We fund them with long-dated bonds that we place with pension funds and insurance companies. That's a model that exists in other countries, but not yet in the UK. The big advantage is that we can access and help people that aspire to own their home or stay in their home without the risks that current products offer.
So Hamish, so in some parts of the world this will seem like the status quo, the norm, but this is actually a bit of a revolution here in the UK.
It's very new for the UK. The UK has always had a deposit-led mortgage funding market, and that means very short-term mortgages, 2 years fixed and 5 years fixed, where borrowers are continuously refinancing at the end of their term. If you look into countries in Europe, so Denmark, the Netherlands, France, Germany, and also the US, there's just a different mortgage market where it's far easier and the infrastructure exists for pension fund capital and insurance capital to fund the mortgage market. And in that case, you see a far more diverse mortgage market, which with a much greater proportion at the longer end.
So Arjan, this is the crux of it, isn't it, really, that the investments you're trying to get are coming from pension investors, which are in of themselves long-term investments, so they add an extra layer of stability to the products that you offer.
Absolutely. I mean, people save in their pensions to have an income later in life, which obviously is very important. The other very important aspect is that people own their home. Homeowners are healthier and wealthier. Healthier means they're more productive, and they also don't go to the NHS as much. And they're wealthier, which means they can actually save up for their pension later, and they can spend and be a consumer and make the economy turn around. So getting a high level of home ownership is very important. Funding it with pension is very important because the pensioners provide that stability. You have domestic assets, domestic liability. Whatever happens internationally to interest rates doesn't matter. It is all locally in the country. So you create a very stable domestic economy that keeps functioning. And we saw that in Denmark over the financial crisis, where the market just continued, unlike the UK, where we had to bail out the banks and people couldn't get mortgages.
So I assume what you want now is for pension fund managers to get on board with this and see the opportunity that you see. What would be your message to them?
There's a lot of money that needs to be invested in housing. That can only come from the pension funds.
We give the pension industry the ability to get access to long-dated fixed-rate mortgages that are not here yet. They haven't been introduced. We're the first one to introduce that, and this is the time to do it given the market situation that we have.
So Hamish, particularly for people who are able to afford a high rent at the moment but can't actually get a mortgage, this could completely change things for them, couldn't it?
This can completely change it. This gives young people an affordability boost to get them into a property sooner. And that's very important as a society, that we get people into a house quickly and increase home ownership. Home ownership's been falling steadily since 2004 when it peaked. And a society with high levels of home ownership is a much happier, healthier and productive one. There are many cases at the moment of borrowers who are finding that they cannot get a mortgage for the same amount of the rent that they're paying. The benefits of a long-term fixed-rate mortgage is you remove the interest rate stress, so you can lend people what they can afford rather than what the stress testing says they can lend.
Let's just talk about risk and the fund manager's fiduciary responsibilities. Can you explore that a little bit for me?
Because we're a bank, we're highly regulated, the governance is there. People can deal with us knowing that we're heavily regulated. We're not just a simple shop, if you like. The second thing is that we need to add is that we're not disrupting the current market. The market has been shrinking since the financial crisis. What we do is actually put products out there to help the market grow to what it should be for a population that we have.
we want to work with other lenders to be able to maximize the distribution of the longer dated product, and for consumers to be aware that the product is available and the benefits that it brings.
Arjan Verbeek, co-founder and CEO, and Hamish Peacocke, co-founder and Chief Capital Officer of Perenna Bank. Thank you both very much.
Thank you.